A very good evening, everybody. Welcome to the webinar, The Mindset of a Successful Trader. I'm Ming Hui from Phillip Futures, and speaking to us today will be Mr. Tom Yuen, professional trader with over 30 years of experience in the industry. He will be sharing with us how investing and trading can be compared to warfare, and stay tuned to learn about some psychological pointers and discover more about yourself as a trader. Before I pass this on to Tom, I'd just like to inform you that if you have any questions throughout the course of the webinar, please feel free to drop them into the questions box as we will have a Q&A session towards the end. And now, without further ado, let's have Tom speak to us.
All right, I have unmuted. So I hope everybody can hear me. Yeah, if not, organizer, please beat me. Otherwise, all right. Very good evening to all of you. This is me again, Tom Yuen, trading symbol YCK. And thank you, Philip, for once again helping organize this session. Topic: the mindset of a trader. Okay, all right. So I hope you all have scanned the necessary thing to go into their demo for the upcoming webinar or whatever. If you miss this, doesn't matter. At the end of the session, the same page will appear again for you to log in. Otherwise, we should proceed. Yeah. Okay. The usual disclaimer slide, which I always do so by helping them summarize in 2 words, add on to my 2 words. Yeah, instead of making you read the whole disclaimer, what they are actually trying to warn the audience is you're about to listen to something that is considered high risk. All right, basically investing is it carries risk, yeah, but especially for trading, for derivatives, for trading futures. So it's typically high risk. But I would like to complement with my 2 own words that is called high returns. It is very important for you to really understand this. Instead of just to read about the disclaimer that it carry risk, I think this has got to do with ultimately whether you are successful or not, especially related to the topic on money management, which I did during my last webinar. So I would highlight one more time. For anyone to be successful, it is important for you to be aware of risk and return. If someone to one extreme focus only on return and totally ignore risk, right, this can very likely lead to the risk of ruin, yeah, him losing everything because he does not respect risk. However, over the other extreme, for someone who focus too much on risk and totally ignore return, will become a chicken heart such that you can't possibly make any money. So it is important for you to balance both, right, to realize that you are managing risk to exchange for return. Okay, for this is where I come from. For those of you who are seeing me the first time, my name is Tom Yuen, my trading symbol YCK. Yeah, I'm still wearing this badge where once upon a time I was in this place. This is the floor open outcry called SIMEX. In this place, people there are totally aware of the need to balance both risk and reward in order to make money. And we're talking about if you can do well, you are making a lot of money, right? So another thing, just again, if you do not know, in this place, many of us are not employees and we are not servicing customers. We take our own money and go to this place and we trade. Yeah, if we can make money, that will be our income. If we cannot make money and we lose money, we have to ask parents or wife for allowance, or we have to just simply quit. So that is what professional traders, floor traders do. And I did this since 1992. This next slide is a proof of how long I've been in the floor, because this guy is standing next to me, right? I joined the floor in 1992. I quit my job as an engineer and I started trading my own account Chinese New Year that year, 1992. And Nick Leeson, if you do not know him, I will show you the newspaper cutting later on. He came on board in 1993. He basically commanded the whole Nikkei pit all the way until 1995, when he single-handedly brought down bearings. All right. Now, I always tell people I'm showing this for 2 reasons. Number one, to show you, to prove how long I've been from the floor when he's around. The second, actually more important reason is to not to let him down. In fact, we all respected him as a very good trader. Related to today's topic about psychology, he knows everything about trading, yeah, about the mind. Only unfortunately, towards the end, he lost to himself, yeah, and he did not manage his risk well. So the important point I want to let you know is, doesn't matter whether you are retail, whether you are professional, whether you are institution, we all have to do similar thing. We all have to manage our own respective risks. You can manage it well, you can make money, all right, respectively as a retail, professional, or institution. If you don't manage it well, whether you are retail, professional, or institution, you can also bring yourself to this kind of outcome, okay, or ending. All right, so the purpose of this series of webinar, I wonder if many of you have been following me since the start of this so-called initiative or project about 5 months ago, that together with, in a way, SGX and Philip, we tried to have an initiative to give you a series of monthly webinar so that it can get you started to trade SiMSCI as soon as possible. For those of you who do not know what SiMSCI is, yeah, it's a short form. We call it SiMSCI. It stands for Singapore MSCI. It is equivalent to STI, all right? So STI is a Straits Times Index, but we have another equivalent of Singapore Index that is called Singapore MSCI. So they move with about 97% correlation. So if you do not want to invest in individual stock, if you wish to invest as a basket itself on top of ETF or any other index related instrument, you can actually trade the index futures, which is the SiMSCI futures. Yeah, so this whole purpose is like, without attending any course, I hope to share with you some of the necessary startup pointers, just like how the floor traders used to give tip, yeah, to newbies coming in. So these 5 months I've been doing very candid sharing with a lot of storytelling and concept delivery. So if you can get the concept right and you go back and explore with the help of Philip Broker, it is not difficult for you to get started, right? So this is the purpose of this series. Now, this should be the last one. We organized since August, and I started the first one with this topic, the technical trading, the SiMSCI, whereby I talk a little bit more about the SiMSCI contract specs. I talk about how I approach trading in the technical manner. The next month, I talk about what floor scalping is and how scalping change its form when the floor is gone, and now we do electronic trading. So I modify to do position scalping. And the third session, I talk about trading edge. I personally like this session a lot, to make you understand that if you want to succeed, you need to find your own trading advantage. Everybody's advantage will be different. You learn from me, you learn from everybody else. We share with you our advantage. It might not be your advantage, right? You have to adopt it and modify and make sure it belongs to you before you can have a positive expectancy. Last month, yeah, I did a session on money management together with talking about the US presidential election, and today, which is supposedly the last of the planned series, right? I decided, together with organizer, we will address this issue on the mindset of a successful trader. Actually, this is my favorite topic. I love this topic a lot, yeah. And today I'm going to share this topic with a lot of storytelling. So if you are those who like to listen to story, I think you will enjoy today's session a lot. But if you don't like story, then I'm thinking, how are you going to manage? All right, well, you decide. Yeah, you decide if the story is interesting enough for you to stay on. If not, you can leave anytime you wish, right? But it's going to be a lot of storytelling, yeah, to explain the mindset of a successful trader. All right, so I'm sure I've shown you this before. You should know that successful trading involves integration of these three areas. Yeah, most beginners, if they have not attended any decent seminar or courses by a decent speaker before, they would always feel that trading success is when you learn the magic formula from a guru, right, or from some teacher or whatever. Yeah, they can live happily ever after. Now, once you have experienced trading, or you listen to a decent speaker explaining to you that there are three main areas. Of course, it is important to have a methodology that gives you the advantage, but on top of that, you need to manage your risk. All right, we are trying to make money by risking money. Yeah, so risk management or money management is another big topic. This one I covered last session. And then this is the most important part as far as I'm concerned. So I liken this to fighting a war. This is like learning a war strategy. You need a strategy to fight a war. You need good weapon. It all belongs to method. All right. This portion is equivalent to bullets. Yeah. Now, if you know how to use the weapon, you know everything, but you've got no bullets, then there's no use. You need to have bullets, and you need to manage your bullets, right? So that you don't anyhow shoot into the air. But most important, when you fight a war, it is about the mind that is executing the strategy. It is the mind that decides how you want to utilize your bullets to exchange for more bullets. Yeah. So today we are going to talk about the mind. All right, the scope is such, yeah, not necessarily in this order. I would liken trading to fighting a war very candidly. And then I would talk a little bit about SiMSCI, yeah, how not knowing yourself can make a difference in you trading SiMSCI, whether you make or you lose money. And some key pointers eventually after this whole session for you to reflect a lot more to improve yourself, right? Over this part, over the mind. So first of all, trading versus warfare. Yeah. Now, trading in any way is just like fighting a war. So when we want to fight a war, of course, who do we learn from? This Asian war strategist by the name of Sun Tzu. Yeah, all of us, well, being Asian, we heard of him, and I even heard Western seminars long time ago that they tried to quote him. Yeah, they even pronounce him wrongly. They say, "Oh, this fellow by the name of Sun Tzu." Yeah, so in case you do not know, just in case you're non-Asian or whatever, please pronounce properly and respect this fella. His name is Sun Tzu. All right, so it's translated into English like this. It is pronounced as Sun Tzu. Now, I do not know a lot of his stuff, but let's talk about something that all of us know. Most of you would have heard of this term. Yeah, in Chinese you call 知己知彼,百战百胜. In English, know thyself, know thy enemy, 100 battle, 100 victories, right? I'm sure if I quote the first phrase, many of you can continue with the second phrase, yeah? And in any other way, right? If you know the enemy and yourself, you need not fear the results of 100 battles. You can say it any way. But what is important about this is, why do I quote this? Yeah, and first of all, in terms of the financial warfare, many people spend a lot of time trying to learn strategy, trying to learn setups, trying to understand the economy, trying to know what the Federal Reserves are doing, yeah, how the economy is doing, what the policies are doing. But many people actually did not aware, spend any time to find out about themselves. Therefore, I would quote something. I don't know whether it's from Warren Buffett, yeah, but I come across this quote that even if it's not from Warren Buffett, is worth listening to. I quote, "If you do not know who you are, Wall Street is going to be one of the most expensive places to find out." All right. Now, this quote is in the opposite way of saying 知己知彼. 知己知彼 is know thyself, know thy enemy. This quote is to tell you that you do not know thyself. If you don't know thyself, what is going to be the outcome if you want to go into the financial market and fight the financial war? You are going to find out in a very expensive way. All right, can you understand this? Okay, so what would I do next? Yeah, now I'm going to spend the next session 10 minutes to help you understand about yourself. Right, so you need to know thyself first. How do you do so? First of all, we have to differentiate between these two things: investing and trading. Honestly, I have been doing education, public seminar, courses for many years, yeah, and I can almost certainly say one thing. I do not think that nowadays there are many investors, but many people think that they are investors. All right, so in the next 10 minutes you're going to understand what I mean. Yeah, so now let's take a look at what is investing and then what is trading. I dig up my notes and I got this definition from my course notes when I attended my first investment course in 1991. So I have this definition, which I like it. I kept it until today. So in my course notes, this is how they define investment. All right. Investing must be construed as a continuing endeavor aimed at the creation and preservation of wealth, bearing in mind all necessary and incumbent risks over a period of time for appropriate return. Now, of course, you can Google, yeah, or Wikipedia, you can find other definition of investment. But personally, I show this to you in order to highlight 5 points. Can you see that there are 5 important points over there? Number 1, it must be a continuing endeavor. All right, investing is not like something whereby you see something soon, you one time hold everything and then you live happily ever after. It's a continuing endeavor. First point. Second point, there is creation and there is preservation. Yeah, so even for investing, while thinking of making money, you must thinking of how to preserve whatever you have, not to lose them. All right, so it's always two sides of the coin. And then the third point, bearing in mind all necessary and incumbent risks. Yeah, of course, related to point 2, why do you need to focus on preserving? Because there are risks involved. And these risks include risks that you can imagine can happen. It also includes risks that you can never imagine can happen. Yeah, example, extreme, you heard of this term called black swan event. Yeah, black swan event is to talk about something that has not happened before, right? That shocked everybody. In fact, for the last 30 years, whether you are aware or not, black swan is getting more and more common, right? Just this year, we have the biggest black swan ever, yeah, where the whole world get locked down. All right, during the worst period, during phase 1, I remember reading the papers about tourist spots, yeah, that is totally empty. So you only see that kind of situation in movies, but now it's actually happening now. So we're talking about the third point, knowing that there will be risks involved, including risks that you cannot imagine can happen. Fourth point, over a period of time. Investing has to be carried over a period of time, right? Not is by definition long-term instead of short-term. And finally, appropriate returns. How much startup capital do you have, yeah, to realistically make the money that you want? Now, in some of the seminar that I used to conduct, some people would raise a question, Tom. So you teach, you do courses, yeah. So if I sign up for your course, how much can I make? I usually want to throw them back this question by answering. I answer by asking them another question. It depends on, first of all, how much capital you have. It depends on how skillful you are. It depends on how much risk you are willing to take. All right. So therefore, I have highlighted to you these 5 important points to complete the definition of an investor. So first of all, you can now reflect already. Do you qualify? Are you aware of all these things to call yourself an investor? Ken, next. I'm going to compare what an investor is and what a trader is. Yeah, you can imagine Warren Buffett over one extreme, all right, as an investor, and you can imagine me over the other extreme as a trader. So there are 2 pages to this slide. Yeah, go through the points with you. Number 1, investors are interested in products of established companies, right? So people like Warren Buffett, he would study a lot to make sure that this company is established. Yeah, the management is good, is decent before he touch the company, before he invests. All right. Whereas a trader, for me, I do not care. I'm very short term. I will trade anything that moves, provided 2 criteria. There must be volatility, right? Without that, there's no opportunity. Number 2, there must be liquidity. So as long as there's volatility, as long as there's liquidity, I don't care whether this company is good or bad. Yeah, because most of the time I will get out very short term, very often get out within the day. So if tomorrow it closed down, none of my business. All right. So that's first difference between investor and trader, going for established companies or touching anything that moves. Number 2, investors are by definition, I already mentioned this earlier, long-term holding. Warren Buffett holds long-term. How long is long? Many things he doesn't sell. He holds forever. That is one extreme of how long-term he is talking about. All right. The other extreme, short-term. How short is short? During the topic on scalping, yeah, I already mentioned to you that we can scalp holding a position for a few seconds, right? So to the other extreme, one extreme of holding forever, long term, and the other extreme of holding only for a few seconds, trading short term. Okay, so that would be the main difference, another difference between investing and trading. Third, investor would perceive the endeavor as a passive income, right? You probably always heard of this. People say, oh, you need to let money work for you instead of working for money. Now, I do not exactly. This passive income basically refers to you are not getting in and out very frequently, right? But passive income doesn't mean you do nothing. Warren Buffett spends a lot of time reading, research, and continuous reading. Yeah, there's a lot of effort behind the investment process, although the effort is not translated into active trading, right? So So because of that, it is perceived as passive income as compared to trading is active income. Now, trading, I will be actively getting in and out, yeah, waiting for setup, in and out, deciding where to exit with a profit, deciding where to cut loss. Okay. So next point, investing by definition, you are interested in income from dividend, from interest payment. All these are what I will call yield. Yeah, you are concerned about the yield and in the long term capital appreciation. Okay, investors are interested in all this. Now, traders, primarily, I don't care about dividend. I don't care about interest. I do not care. When I go in, I'm primarily interested in price appreciation or depreciation. This is because trading definitely, basically, we can do both direction. If I want to buy, I want to go for price appreciation. But when the market is bearish, I would want to sell short. I'll go for price depreciation. Yeah, both ways I can make money. So I'm concerned with only the price. All right, related to this point, of course, the next thing is a trader may start by buying or selling first. Yeah, you go long or you go short. Your direction is correct, you can make money in both ways. Your direction is wrong, both ways also you can lose money. Whereas a trader would always buy first, or rather wrong. An investor will always buy first. So to an investor, up market is good, down market is bad, right? Generally, yeah. Now, of course, during the up market, the good investors already sold everything and they want the market to crash for them to buy back again. So that is when the investor would like the market to crash. But otherwise, most of the investment talk is when up is good, down is bad. All right, another 3 more points. Investor will expect moderate returns for moderate risk. Yeah, since you're holding long term, you cannot aim for so small return. Your return must be a bit more moderate. At the same time, they are not taking very huge risks, all right, to go for huge returns. So therefore, moderation would be a generally accepted term for investing. Whereas trading, we are willing to take high risk to exchange for high return. Yeah. Now, related to this, I'll explain this a bit more later on. Next point. Investing basically are more fundamental based. You do careful decision, careful analysis of companies' past performance, future prospect. Basically fundamental. You take occasional peek at the chart. Those who are good and understand that fundamentals doesn't offer you timing, they would learn technical analysis to get a good timing. All right. Now, whereas for trader, since we are focusing on just price action, small time frame noise, we do not really care so much about the fundamentals, because short term fundamental, the price can move against the fundamental analysis. Yeah, so we make transaction based on intuition, right? When you gain experience with the intuition, market sentiment, and primarily we rely heavily on technical analysis. So that is another difference. Finally, investor most of the time use own money, whereas the trader can borrow money. Right? What do I mean by borrow money? Now, ladies and gentlemen, futures, yeah, if you've attended my last few sessions, I keep mentioning about leverage, about margin, correct? SiMSCI is worth about $30,000. I trade SiMSCI using a margin of $1,500. If I wish to buy 3 lots, which is almost 100K, I use 1.5K times 3. I use less than $5,000 to get an exposure of 100K. Yeah. So where did that 95,000 come from? It is implied. It is implied that I borrow. So I get in and I get out. So it's implied that I return. So therefore, because of this, it is high risk if you do not know how to manage this margin or leverage concept. All right. So, okay, ladies and gentlemen, I have shown you the definition between the approach of investor and trader. Now, I want you to think a little bit. Yeah, think a little bit. So, do you think you are an investor? Now, can you see that this is a newspaper cutting the headline from year 2000? I have been doing education since 1993. I'm very capable type. Ever since I stabilized as a trader, I started making money. I have been sharing my wonderful experience as a trader to a lot of people. So in year 2000, I saw this article, this title, yeah, do you think an investor? Now, so I want all of you to think a little bit. Are you investor? Actually, I think a lot of people are not, you know. They want to hold short term. They make money only, they want to get out. They are not like Warren Buffett, want to hold like for 20 years, 30 years. And after buying already, they keep monitoring the market. Up or down, up or down, why? All right, so can you see that if you don't know who you are, why? Warren Buffett says Wall Street is going to be a very expensive place to find out. Now, investing to me, I think, other than the skill set in understanding fundamentals, The other skill set are relatively simple, right? You buy value, after that you dollar cost average, yeah, you hold it for long term. So the skill set is relatively low. Whereas if you want to trade the shorter time frame, you go right down to intraday minute chart, yeah. I personally call it noise. There are a lot of noise involved. So if you cannot handle the noise, then you will probably lose money going down to the smaller time frame. So by definition, if you wish to do very, very short term, your skill level got to be high. Okay, now, so therefore, this is again to let you know, do you have the skill level to move up or move down, yeah, to do more on investing or more on trading, right? I will explain this by showing you another example. Those of you who have attended my session before, you know that in my trading community, we have two teachers, I myself, one, and another one, I always call her a sniper, yeah. She is so good, so accurate, and she can trade smallest time frame with high accuracy, such that she will use the smallest amount of time to yield the maximum amount of return, right? We're talking about sometimes being able to within 2 hours make a 5-digit or sometimes even 6-digit income within 2 hours, yeah. So therefore, because of that, you can imagine, who do you want to learn from? Do you want to learn from her? Most people want to learn from her simply because she's a super 5-star trader, right? Now, so one day, take a look at this, yeah. This is in August. um the sniper class, physical class, is always very packed, yeah. Physical class only 20 capacity, so people want to come in, always got to put into waiting list, cannot. Until the COVID-19 lockdown, we cannot run the physical class anymore. We spent a couple of months facing into electronic online sniper class, right? And that is when our sniper class by August grew to about 50 people. Now, I helped to run this class. Of course, the sniper trader is the one that is imparting the skill set, but I'm helping with managing the rest of the 3M. So I realized that in this, among the 50 students, there are at least 2 or 3 of them are investor by definition. They always want to buy and hold, right? Therefore, one day during August, I decided to do a poll, yeah, not for the rest of the people, but for these 3 fella. What did I do? I poll, okay? Now, when you want to make money, actually, what is your focus? Are you trying to focus on achieving a daily, weekly, or monthly target, which is what the sniper is teaching them? Or are you trying to catch most of the market move because you feel that you need to catch the move to capitalize on it to make money, right? So after having that poll, actually, this particular student, he's very honest, you know, he answered this way. The other 2 were actually cheated. They initially answer here, but realized that very lonely 40 over here, and then they changed their mind to go and click the other side. Cheat, one told. So do you know what I'm trying to share with you? This is what I mean by know thy enemy, know thyself. Now, if you try to learn from a sniper who is very good at doing very, very short term, you have to change your whole mindset to attune to also doing that in order to carry out the strategy. If you still like to hold a stock, yeah, that rally 20%, you don't want to miss this 20% move, then you cannot be learning the other way. Now, my sniper trader has been telling the students, how often does the 20% come? Yeah, if I teach you one method that can make money almost every day, you have the opportunity, you add them together, you are able to make much more than trying to wait for that particular stock to run 20%. All right, so that is what I mean by trying to match your temperament, your need to the strategy or to learning from whoever. All right, so I will talk a little bit more about this portion, yeah, about SiMSCI. Take a look. This is a SiMSCI more than 10-year chart. Since the rally and then the 2008 subprime crisis crash, all right? Many other markets have already risen to take up their high, their pre-2007 high, right? But look at STI. STI, if you ignore this top part, if you ignore this crash, actually STI is in a sideways market for 10 years. 10 years sideways market. Can compared to the other one, which I used to show you, yeah, NASDAQ. Take a look at NASDAQ. I'm not even showing you a 10-year or 30-year. I'm showing you that NASDAQ 2019 started to test the historical high. After doing 3 attempts, it went through, all right, and rallied all the way until 2020 February before the COVID-19 crash. It did a V-shaped recovery and very quickly resurfaced above the high. And what happened? It continued to trade higher, and for about a few months, yeah, prior to today, it was trying to form a sideways range up there. Now, if things becomes bearish, this could jolly well be a double top, yeah, and even triple top. And then if it breaks this level, this would be a top that is being formed. But it is not forming a top. In fact, it is like forming a congestion, and it continued to break high. Okay, now, so what I'm trying to show you by comparing with SiMSCI. So some people say immediately, say, hey, Tom, then why you ask me to do SiMSCI? I'm not asking you to invest in SiMSCI. I'm asking you to trade SiMSCI. You tell me there's no opportunity. You tell me this movement down, this movement up, this movement down, right? This crash. And then during this period when I'm actually still shorting and making money, yeah, until this month when everybody rallied, right? Only then STI give you a run of at least 18% gain for the month. Okay, so to summarize what I'm trying to tell you, yeah, you have to find out who you are. Are you a trader? Are you investor? Who you want to learn from? Are you learning from an investor or are you learning from a trader? And the contracts that you're trading, right? Investor, I do not suggest that you touch our STI. I don't think this thing can give you any great potential of any investment income. But trading, it is a very good contract to trade. Yeah, it is still a very decent contract to trade, especially for newbies. All right, so I've spent half an hour, okay, with that. Now, the remaining time, I'm going to do something that I decided is going to be very interesting for tonight's topic, since we're talking about the mind. Yeah, I'm talking about understanding key mental conditioning for successful trading. So when I was new, I remember I read a lot of books, right? I read one book, Market Wizard. Yeah, you might have heard of it, Market Wizard. And then this fellow by the name of Linda Rashki. So some people ask her, Linda, what books do you recommend that I should read to improve trading? Do you know what Linda Rashki recommends? She say, read books on sports psychology. Sports psychology. All right. Now, so therefore, I'm going to talk about sports, yeah, for the rest of the session tonight to make you understand the sportsman's mindset. All right, because it's also equivalent to a warrior's mindset. Yeah. And there's one term called in the zone. Okay, in the zone. So we're talking about sports in the zone, and we apply to trading in the zone. Now, so first of all, what is the zone? What's the definition? The zone is not a physical place. It is a mental state. It is a mental state in which your thoughts and actions are occurring in complete synchronicity, meaning that what you're thinking, you are reacting. Yeah, and you are reacting exactly the way you are thinking. Sin, sen, sin, he, yi. Yeah, so complete synchronicity. And the zone is the ability to perform at your highest level in whatever domain in life, not restricted to trading, not restricted to sport, but in any form. Okay, until here, some people say, wow, very chima zone. Can you put in simple English or not? In simple English, it's called top form. Have you heard of this term? Wow, today I top form, right? Top form. You play billiard, you top form. Anyhow, also you pot. You play football, top form. Anyhow, kick, also you score. Okay, so in the zone means top form. Now the question is, how do you get to the zone? Who gets there? How do you get there? But most important is the third one, how to stay in the zone. All right, how to become top form and maintain top form. There are 6 pointers that I'm going to help you, that I'm going to share with you. Yeah, if you can achieve these 6 points, then you would very likely be able to experience top form very often. Okay, the 6 pointers, one by one. I want you to think in terms of sports. This is where all my stories come in. So I'm going to share all the 6 points by sharing with you stories. Now think of sports first. Yeah, number one, you have gone through a lot of preparation, or otherwise maybe more appropriate to use the word training. Yeah, training. Now I'm going to use the example of badminton. My daughter, when she was young, when she was preschool, 5 years old, I sent her to learn badminton. Yeah, ex-national national player, Singapore coach. So I myself am not a badminton player. So when I send my daughter to learn badminton, I'm quite keen to see how they train. All right. During the first 1-2 session, I was quite amazed by the systematic approach that they do. First of all, do you know what they teach absolute newbie about badminton? they need to teach them how to hit the shuttlecock. All right. Now, I do not know how to play badminton, but a lot of people without training will look at the opponent, and you will take the racket and you just hit like this, right? But first of all, they will teach you need to stand in a right angle manner. Okay, a right angle manner, and therefore when you hit the racket, it's at a right angle, so that it's more effective when you smash it that way. So they will hang a shuttlecock in the air at about the correct height, and they make every 5-year-old line up, yeah, and then they will ask them to look at the opponent, turn 90 degrees, look at the shuttlecock, and then hit 20 times, and then you go back, line up, line up, line up. So basically, what are they trying to train them? They train them until this posture becomes a muscle memory. So when they're actually playing the actual sports, they don't have to think that, oh, I have to stand like that, turn 90 degrees, and then hit. All right. So they practice until it becomes SOP. Yeah. So that is the first important criteria before you can actually reach a top form stage. Number 2, staying positively focused is the second criteria. All right, I'm going to use the example of Tekken. Yeah, Tekken, that means fighting. Imagine two warriors, two fellas go to the stage and fight, both holding a dagger. Okay, now listen carefully. I'm going to describe to you the mindset of both of them. Yeah, A and B. A, look at the dagger, look at the opponent, and he's looking at his throat. All right, he's trying to think, yeah, how can I most effectively plant my dagger, stab into his throat? Okay, sorry, I know this sounds a little bit violent. Some of you might not like it, but just for illustration purposes, right? A is focusing on how do I plant this blade into his throat. Whereas B look at opponent and look at his sword, and then he swallow a saliva. Wow, what a big sword! What a big blade! If that blade cut me any part of my body, it's going to hurt, man. All right. Do you understand what I'm trying to tell you? So who do you think will likely win, A or B? Yeah. A, whole focus is how do I plant my blade into the opponent's body. B is I don't want the opponent's blade to cut me. All right. So it is important to stay positively focused for you to achieve a top performance. 3, focus on the process, not the outcome. Now, I'm going to share this is going to be a longer story from a drama series which I watched a long time ago when I was in secondary school. In the 70s, I watched one Hong Kong drama series. I still remember the title. It's called Chu Xian. I love that show. It's about basketball, all right, basketball. Now, to cut the story short, it's about a group of schoolgirls, quite talented, but they are very raw. They have not been trained, yeah. They have the talent, but their coach is no good. One fine day, the school changed a coach, all right. The coach came in, the first thing he realized that they are all so ill-disciplined. They are not on time for training and they are so sloppy. So he spent 2 days, yeah, scolding them and drilling them. After that, he started to train them. All right. So after about 3 months of training, yeah, he decided that okay, it's about time for them to play a match. So he arranged a match, yeah, for them to play with another group. And then they played. After 3 months of training, they played. For the first time, they win. They've never won before. After that match, it's just a friendly match, right? They're so happy. They're jumping and jumping and jumping. They tell the coach, oh, we won, we won, we won. But they look at the coach, his whole face is black. All right? What did the coach say? Yeah? He said, hey, we won. No, aren't you happy? The coach said, you all played horribly. What I taught you over these 3 months, yeah, you all throw it down the drain. But we won. It's not about winning. You played badly. So the coach went back and trained them again another 3 months, right? And warned them that I want you to play according to your training. Yeah. So he arranged another match. This time a stronger opponent. This time the team lost the game. All right. But the coach is very happy. The coach say, can you feel the difference this time? You all played a lot better. It's just that your opponent is much stronger, therefore you lose. But I'm very happy with your performance. Okay, so this story is basically to let you know that if you want to achieve tip-top performance, yeah, to be able to achieve top form, ultimately, you need to focus on the process, not the outcome. It's not about winning or losing, but whether you play it right or not, whether you follow the SOP or not. All right, this is another longer story. Okay, please bear with me. Rock climbing. Now, I stayed in Sweden for 3 years, in 1986 to 89. Yes, those of you who know my story. And in Sweden, during spring, a very popular activity is to do rock climbing, not artificial rock, real rock. All right. During spring, when the air is still cold, yeah, but the snow already melted, so rock climbing is a popular activity because when the sun shines onto the surface of the rock, it is hot with the cold air and the hot rock, so it's very fun. So we all sign up for a weekend rock climbing course. Okay. Now this is when we all try to get our best t-shirt, best shirt, and we wear our shoes and go there. The first thing the instructor make us do is change your shoes. Okay, you use their shoes. So he showed us a very special rock climbing shoe that he rubbed together, yeah, until the rubber got heated and he slammed onto the wall, and the shoe gets stuck onto the wall. So it naturally gives you a very good grip. All right. So all of us change into our shoes and then we start to climb. Now we divided into team. So my team has got 4 of us, all Singaporeans, 2 ladies, two male, 2 female, 2 male, yeah, me inclusive. So therefore, when we started climbing, all right, of course we climbed some simple ones, yeah. We climbed about 3 lanes. After that, quite easy. After climbing up, rappel down, climb up, rappel down, all right, and do all the relaying. Now, then after lunch, the instructor say, okay, come, let's quickly, I take you to a more challenging lane, yeah. So we go to one particular lane. I mean, to us, we can't see what is the difference, right? But the instructor went first, as usual. So he will start to give us instruction as he climbs. Over here, you do this, do this, do this, and reach one particular spot. Yeah, that is when he say, listen carefully. Over here, put your hand here, put your right hand here, put your legs here. Yeah, from below, we saw that. Put your legs here. Okay, and then over here, you must step on it. Step on it. And he say one more thing. At this point, you must trust your shoes. And he disappeared. Okay, so our turn now. Now, I find it very funny. What do you mean by that? You must trust your shoes. So we let the ladies go first, yeah? So one of the lady reached that point, struggled there for 5 minutes, cannot make it, right? So got pulled up. The second lady went, struggled that point, stuck for 5 minutes, cannot make it, got pulled up. So the other guy and myself look at each other, and the guy say, you go first, yeah? So ask me to go first. Okay, I was a very fit young man, so at the age of 27 years old, okay, sure, no problem. So I started to climb, all right, and then reach that spot, follow instruction, yeah, put my left hand, put my right hand, and then put my right leg on where it is supposed to be. Now, from below, you can only see where you're supposed to put your leg. But once I'm up there, when I put my leg there, I realized that that wall is not vertical. It is not this way. It is inclined. It is inclined. So when you put your leg here, how can you possibly step on it, right? There's no way. So wow, I got stuck and didn't know how to move. So at that point, the instructor could see me from the top already. So he's telling me, okay, can. Now climb up. Step on the rock, step on the rock. I can't step because when I try to step, I'm pushing it away instead, yeah? So I dragged for a little while, and by which time 5 minutes is gone, yeah? I can feel my muscles are starting to tremble already. Now, if you are guys, you should know, we do chin up, right? Once you start to tremble, I will not be able to hold on for more than another minute. So I know that if I still don't clear, I will probably have to be pulled up by the instructor. So while I was deciding how, the instructor shouted, "Step on the rock, trust your shoes." Wow, I still didn't know what he meant, yeah? But there's no way I can step this way, but nevertheless, I tried to step. But when I tried to step and I push, it's funny, I felt a suction of the shoe gripping me the other way instead. When I push, I feel the reaction, and with that push, I cleared. All right? So the whole point is your equipment, yeah? The strategy that's being taught to you. You must have faith, you must believe in it in order to be able to perform, all right? The fourth point. I want to share one more story with you, yeah, about the importance of faith and belief. Now, this is our Singapore story about our table tennis. You know that long time ago, we are trying so hard to win the gold medal, right, for table tennis, and we engage all the imported talent, including the coach. We never got our gold medal until this year. What is the difference? Yeah, when I read these papers, actually to me, it's very clear-cut one difference, because this coach that the sports council changed, yeah, compared to the previous one. Take a look at the previous coach. The previous predecessor, Liu Guotong, he told the team, it is impossible to beat China. All right. You imagine your Singapore team, national team, your coach trying to teach you, and when you go to the competition and tell you, you can't beat China one, they anyhow one person who can beat all of you. How can you possibly win? But this new coach, he sowed the seeds of belief. All right. He say, hey, this time the situation is different. He's telling them and everything else, this is your best chance to win and take home the medal. And we took home our medal. All right. So this would be the point of faith and belief, that it is important in order for you to perform. Okay. Fifth point, commitment. Now, what is my story? IPPT, yeah. When I went for reservist, right, we still do IPPT. I can run very well, so another PTI can run very well, but the rest of our reservist group cannot run well. One of them, in fact, always fail. So you know that the incentive, right? If you run certain timing, you get $100, you get $200, or you get $400, yeah. So we try to tell everybody it's very easy to achieve $100 timing. It's very easy. We just need to do a bit of training only. Now, so we're trying to convince one of these guys. We tell him, come, we'll help you do it, right? We go for training. So we look at his shoes. So the PTI said, hey, you need to invest in a pair of shoes. You don't need very expensive. Between $40 to $60, let's get a good pair of running shoes. Okay? Now, do you know what his reply is? No lah, no need lah. I can run with this pair of shoes lah. When I get the $100, then I go and buy a pair of shoes. I'm slowing down for you to think. Ladies and gentlemen, can you see the order? I'm going to commit to a pair of shoes and then I go for my training. Compared to another mindset, well, I'll go for training with whatever lousy shoes I have. If I make it, I get $100, then I'll buy my pair of shoes. Yeah. Now, you must remember, for top performance, for any sports, commitment comes first. Commit to what? Commitment to success in any endeavor in your life. Commitment to success does not necessarily guarantee that you will succeed, but it will let you stand a much better chance. Once you're committed, your whole body, yeah, your nerves, your cells, everything will move towards the direction of success. All right, it has to come in this order and not say, oh, I success first, then I buy a pair of shoes. All right, fourth point, last point, you must be totally objective, totally honest, and assume full responsibility for whatever outcome for you to be able to be top form, right? So a good sportsman will never blame the racket, will never blame the court, will never blame the weather, will never blame the referee. Yeah, he knows that he win or lose is all about him. It's all about his performance during that day. Okay, all right. So therefore, on top of that, you must enjoy, you must have fun. Yeah, you cannot be stressed. All right. So if you find this interesting, if you can relate to this in terms of sports, yeah, I shall now talk about trading. Trading is also a kind of sports, right? And trading, you want to be top form, you can also apply the same few principle. Van Tapp say this. Van Tapp say this, yeah. The financial market trading is an arena filled with world-class competition. Do you agree? You approach the market, you want to touch Forex, you want to touch S&P, you want to touch even SiMSCI. Who else is touching it? The funds are touching it. I am touching it, yeah. The rest of the professional full-time traders, they're all touching it. I will show you one more quote. By another wizard, you are competing with people who devoted a good portion of their life to this same endeavor. So what is the conclusion? What is the conclusion? I'm slowing down to let you think. I can immediately, because I give seminar to so many people, I can immediately think of many answers. On one extreme, all right, the answer which I would like to hear. Oh, therefore, I would need to put in more effort, yeah, to also make sure that I become equally good in order to compete in this. That's the obvious answer, right? But there will be people who think that way. Wow, so difficult lah. Wow, so much effort lah. Wow, compete with full-timer, you're sure to lose lah. Can you hear the difference in terms of in noise and in terms of sound? All right, so now let's go through the same 6 steps. I'm going to go through with you. Now you think of trading, right? Trading. First point, preparation, or I call training. Just like badminton, where you have to train until you go into your muscle memory, yeah? When you learn a trading strategy, all right, when the market is jumping, do you need to think of that strategy? Is it like that? Oh, is that a head and shoulder? Oh, is that a trigger? Must you do a lot of homework, back testing, until you're so familiar with that particular setup, such that when the setup appear, right, it grabs you by the face and you simply react. You simply react with your muscle memory in order to achieve top form, all right, in trading. First criteria. Now, the perfect example, if you remember a few months back, yeah, with this Abe suddenly resigned, correct? Suddenly resigned, and the Nikkei plunged 1,000 points just in 1 hour. Just in 1 hour, the Nikkei plunged 1,000 points. So I have also shown you this, yeah, in our most intensive advanced course in our education, my sniper trader. She immediately posted this in our sniper Facebook, all right? Before he made the announcement, what do you see in the chart that's asking you to short? Now, this is not subjective, huh? This is objective, following certain SOP. That you've been following, you will be doing exactly this step. So it has reached level, it has given you certain pattern formation, right? And the effect of the announcement caused it to plunge, yeah? Now, after the plunge, when the market reached 423, what is the next 1 or 2 action that you can add on? So she posted all these questions, which means that if you have gone through the training like badminton, right, you already know how to react. So first of all, now it's asking the question to see if you know how to react. People started answering a day, oh, first action to 423, and then you do your BJ plus, right? You do whatever. Okay, the outcome is this. If you have gone through all the training, knowing that you are supposed to take this signal, yeah, the whole announcement gives you your profit of 14,000, another profit of 6,000. Unfortunately, there is no setup for you to take here. There is a setup for you to take here that give you 8,000, all right? And this setup will ask you to buy with a certain size that allow you to make your next profit of 92,000. You add together, this is more than 100,000 over 2 hours. This cannot be achieved if you have not been trained and you react with muscle memory. It cannot be done, all right? So therefore, what I'm trying to share is, I quote this from Bruce Lee, yeah? I fear not the man who has practiced 10,000 kicks, but I fear the man who has practiced that one kick 10,000 times, all right? You learn so many strategies, no use. But if you learn one strategy and you do it again and again and again and again, you do it so many times, you become very scary. People are scared of you. Do you know that? I want to complement this with one more quote. Yeah, one more quote. I personally like this a lot. It takes 100 times to remember the move, right? 100 times, then you can remember, not by teacher saying one time. And then you take 1,000 times to make it beautiful, all right? You need 10,000 times to grasp the essence, yeah? Once you grasp the essence, are you tip-top? Are you top form? Therefore, 10,000 times is what Bruce Lee said. You need 10,000 times. You practice 10,000 times, then he'll be scared of you, okay? All right, so preparation and training. How many times have you trained a certain setup? Yeah, whether you're an investor or you're a trader. I want you to ask yourself. Number 2, staying positively focused. Okay, positively focused. Now, I want to quote something from Van Tapp. Van Tapp. In his book Market Wizard, he said this. Imagine you see a setup appearing. Okay, trader A. This is how trader A behave. See the signal. Recognize that it is a setup. Yeah, it's a familiar. Tell yourself what might be wrong if you take it. Feel bad about it. How about another trader, trader B? See the signal, see the setup, recognize it is familiar, feel good about it. What is the difference in action? Do you think trader A will execute the trade? Do you think trader B will execute the trade? Obvious, right? Obvious, right? Now, so therefore, it is important for you to maintain a good mental hygiene. Make sure this part is cleaner. This is loud, this is vulgar, this is vulgarity, this is vulgar hygiene. This is good hygiene. Make sure that you are positive, all right? The law of attraction, all this would be important. Yeah. So third point, to focus on the process, not the outcome. If I ask you a very candid question, I give you the example, the story about basketball, right? About how this team they won the game and they're so happy and they get scolded. Later on, they lost the game and the coach say, "You're traded, you played well, yeah, you played well." Now, so my very candid question for you is, ladies and gentlemen, when you choose trading, what is the purpose? Why did you choose trading? Most people would almost without the need to think, they answer me, make money lah. Yeah, still right? I choose trading or investing to make money. My next question to you, what is making money? Is making money a process or the outcome? All right, making money is the outcome. So therefore, most people would get it wrong. They focus on making or losing money. Yeah. But once you learn about trading or investing, right, you learn the proper way, you must focus on the process. Once you do this process again and again and again and again and again, and do it 10,000 times, yeah, the outcome will take care of itself. You don't have to think about, hey, whether I lose or make money. You just keep doing the same thing, all right? The outcome will take care of itself, okay? So remember this. Most people can't make it because they focus on the wrong thing, all right? So positive thinking book also mentioned one thing, yeah? They tell you to live in the now. This is how you focus in the process. Because if you feel guilt, you're living in the past. If you feel fear, what if, you're living in the future. So do not feel any of this. Try to focus in the now, focus in the process, and you would be able to do well. All right, next point. Yeah, trust your shoes. The story I had for my rock climbing. Faith and belief. Do you trust an indicator? Do you trust a setup? Do you trust the weapon when you fight the war? Faith and belief, all right, translated into Chinese is called 信心. I translate 信心 back again, it could mean confidence, yeah? So trust your shoes. Do you have the confidence? Now, how I usually share with my students the importance of checking whether you have faith or confidence or belief or not is to feel whether you feel fearful. There is a mathematical inverse relationship between fear and confidence, right? If you feel fearful, you cannot possibly feel confident. If you feel confident, you cannot possibly feel fearful. Yeah. So therefore, it's a very good checklist that if you feel confidence, then you should not feel fearful. All right. Again, another newspaper article, 2003. I saw this. I borrowed this title. You will win only when you're ready to lose. This is an irony. I have another concept called prospect theory that I don't have time to elaborate, but I'll just say this out, prospect theory. Maybe you can go and find out yourself, right? Prospect theory basically says that actually most people naturally are not risk taker. Yeah, I think when I tell you this, you should not be surprised. Huh? So since most people are naturally not risk taker, we would choose to do things that try to prevent losses. So instead of focusing on winners, you are trying to prevent losing trade that would in turn cause you to lose even more. So therefore, this particular article mentioned that you will win only when you are ready to lose. Yeah. So therefore, many people do not win because they are not ready to lose. Right. I'm saying this for you to do some reflection that this might be your problem. Now, so what is my solution? I have a very simple solution, yeah, that I share with my students. You learn whatever setup. Do not micromanage individual trade. I think in one of my previous webinar, I mentioned this. You always focus on following one setup and do one batch of 10 trades. Okay. For example, in money management, last session, I show you this. If you do 10 trades, losing 30 cents and going for $1, you must compute this at the end of 10 trades, then only it will make sense, right? So anything good that's being taught to you should give you the advantage that after 10 trades, you should see positive outcome. But what is the problem with most people? Even if some people agree with this, you know what happened? They will take the first 4 trades. Lose, 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 lose. What happened to the 5th trade? Do you still dare to take? All right. Now, showing you this example, it could be you lose 7 trades and then the next 3 trades you make money. Or it could be a random distribution such that this whole batch of 10 trades will have 10 losses. It is possible. But do you have the faith and confidence to follow through thick and thin? All right. If you choose trades, 就完蛋了. So this is one way to make sure that you stick on to your faith and belief and not have the fear coming into the way. Now, fifth point, commitment. Needless to say, to buy your shoe first and go for training, or to win your award and then you buy a pair of shoes. Commitment. No one can compare my commitment. No one, as in I'm talking about generally. In 1991, when I attended a SGX session to talk about the floor, the requirement is we need you to apply for membership together with your letter of resignation from your current job. I went back, I tendered resignation, I submitted. For 4 years in 1993 to 1997, I've been doing education, all right? That time when I do education is to tell people, if you want to make money in the financial market, there is a good place called Open Outcry. Quit your job and join me. You will stand a very good chance to succeeding. In that 4 years, only one person joined me. Only one person. The rest all run away from me like as though this fella asking me to do something so risky. So can you understand why? Most people are not committed to success first. They want to ask around, hey, sure or not, yeah? People come to my course, hey, I attend your course, sure to win or not. Your parents brought you to this world. Did they guarantee you anything? Yeah? Pay a course fee and expect guarantee to win. Hey, come on. You must commit to success yourself first, then only you will stand a very good chance of seeing that, all right? Although still not guaranteed. So today, after teaching for so long, I know that many people cannot have that kind of commitment. And anyway, today with electronic trading, I do not even want people to quit their job, yeah? Because most people are not strong here. So when they quit their job without income, right? When without income, everything shaky, you can't possibly be in the zone. Don't talk about top form, yeah? The lowest form also cannot achieve. So therefore, today with electronic trading, with work from home, many of you can choose to open an account and still stick on to your job, all right? And try to balance this. So, but anyway, I do want to let you know it is important for you to commit to success first before you see success happening and not the other way around. All right? So, a gathering of committed winners. Yeah, this is the place that I have been sharing all along how wonderful it is. Unfortunately, there's no more open outcry. And finally, objectivity, honesty, and responsibility. Right? Just like in sports, you don't blame the racket, you don't blame the court, you don't blame the referee. In the financial market, when you don't make money as an investor or trader, whose fault? Whose fault? People blame the analyst, blame the guru, blame the teacher, blame the market, blame the exchange, blame anything else except themselves. Yeah, again, these people cannot make it. All right, so take a good look. You want top form, yeah? You want to be able to add, most of the time, to be able to add the best performance. You must have at least these 6 criteria. I've given you these 6 pointers for you to reflect, for you to think of how to move towards, achieving mental conditioning that gives you a more excellent kind of performance. And talking about honesty, right? I always like this. It's a bit tricky to talk about religion. I myself am a Buddhist, and I like the title of this book, The Buddha in Your Mirror. Yeah. So again, unlike some Buddhist practice whereby they pray to Buddha for protection. Yeah. So it's all about external. They want external help. But this book actually is suggesting that a person who is enlightened is called a Buddha. So therefore, you are practicing Buddha's teaching so that you can become that state. Yeah, this is exactly what I'm trying to say. That if you want to achieve success, it must come from all the above so that you achieve success. You reach a top form peak performance. All right. Of course, among that, enjoy, have fun. If you find trading or investing very stressful, then it can't be top form. Okay. So with that, now, I have gone through the 6 pointers for you. Yeah, giving you example of sports, giving you and then use the analogy to draw to trading. So I hope that is rather clear how you can move towards achieving the mental conditioning state. Now, the next 10 minutes, I would suggest a routine. The routine I call PRR. All right, PRR. Whether you heard me say this before, stands for preparation, revise, and review. Prepare, revise, review. It is actually not in this order. It is in the loop. It is in the loop. So maybe I would start by talking about preparing, right? When I prepare for tomorrow's market, yeah, after my preparation, before the start of the day tomorrow, I will need to revise my trade plan, revise my rule. Yeah. Then I would, at the end of the day, review my trades, review the market. When I review the market, it will lead to preparation for tomorrow. So it goes in this loop. I will do this daily PRR, and I enjoy doing a weekly PRR. Yeah, when it comes to weekend, all the markets are closed. All right, not even at night. So there's no more distraction. You sit down, you take a good look of how you prepared during last week. What did the market do this week? All right, and how did you behave this week? And then after review, start to prepare for next week's market. So that is the essence of PRR. Now, I would want to highlight some more things for you. Market preparation. How important is this preparation? Yeah, I love this quote. Abraham Lincoln said, if I had 6 hours to chop down a tree, I'd spend the first 4 hours sharpening the axe. Yeah, very quickly you can see 6 hours to do the job. He spent more than 50%. He used 4 hours to sharpen the axe. He knows that once the preparation is done properly, the job would be completed. If you don't spend enough time doing a proper preparation, your job might not be done properly. Okay, you might not even achieve doing your job. So therefore, how important preparation is. Ladies and gentlemen, all of you who are listening to me now, do you have a way to prepare for your trades, whether investing or trading? Yeah, or do you simply listen to guru up or down, what's the market view, and then you turn on the computer and look at the price jump and you simply react without any plan and you just simply jump into it? All right, so without preparation, yeah. Now, the skill and knowledge that is required to perform well under pressure is not obtained moments before the performance. Chinese, there's a phrase called 台上3分钟，台下10年功. When you see someone doing something very, very well, right? It's a 3-minute job. If you see a good trader trade in front of you, wow, teach me. You know, behind this, behind that, got 10 years, 20 years, 30 years. All right. So that is again the importance of preparation. Yeah. So after you have done your preparation, before the start of the day, I will need to revise my rule. I need to revise my plan. Right now, I myself, I need to revise my size. This is personally for me, for me, it's important. So I want to share something with you. Some people during this phase of revision, what do? They do mental rehearsal. Okay, mental rehearsal, or you call mind conditioning. I want to share another story with you about the importance of mental rehearsal, how it can work for some people. I remember reading about this story, yeah, about a basketballer in US. The psychology department, they tried to do an experiment, a control experiment, and they got a group of basketball players. They divide them into 3 teams, right? Team A, Team B, Team C, A, B, C. So what they did is, Team A, every day they are supposed to practice. Yeah, for 1 month they practice every day. Team B, control, not supposed to practice. They cannot practice total on their own, right? They must follow the rules. They don't practice at all. Team C, what do they do? Now, every day they will spend 1 hour. Instead of practicing, they all sit down, close their eyes. Close their eyes, they imagine the routine, imagine the SOP. All right, imagine throwing the ball and hitting the basket. Yeah, they just use their mind and practice. They don't do any physical practice. At the end of 1 month, what happened to the performance? Team A did pretty well. All right, obviously they practiced. Team B didn't do well because they didn't practice. Team C, without physical practice, they only did mental practice, yeah, every day. They did as well as Team A. This experiment highlighted the importance of mental rehearsal. Yeah. Now, so therefore, I personally do not carry this lah. But when I'm doing this particular part of revision, I know some people do this and it works for them very well. All right. So to reinforce some good habit or try to change and replace some bad habit, you can consider doing mental rehearsal during the revision portion. Yeah. That means after preparing for the market the night before, the morning, revise your plan, rehearse your plan, and do a mental rehearsal. This is the revision part. All right. Once you have done this, are you fully prepared? Yeah. I want to quote another quote from Sun Tzu Bing Fa. Sun Tzu Bing Fa, I quote, do not initially engage a competitor unless you are prepared. All right. Once you're not prepared, you cannot possibly fight and win the war. Yeah, your chances are no good. So therefore, once you are prepared, once you have revised, now if you're prepared, it's time to simply focus on what is in front of you and commit to the execution. Opening bell, execution. Stay completely committed to executing each planned trade. You're supposed to go in, go in. You're supposed to get out, get out. You're supposed to get out with profit, profit. You're supposed to hit your stop loss, stop loss. All right. So fully on execution, act with your muscle reflexes. That is what you do during this phase. Yeah. This is not even the phase. This is the execution part. So at the end of the day, review your trades. All right. So what did I do? Yeah. Did I follow my plan? Did the market go accordingly, or did the market deviate from the plan that I stay out, or am I able to react according to the changes to the market, right? Are you good? If you're not, then you should be staying out, yeah? Now, so review again your size, yeah? Did I follow my prepared and rehearsed plan? Did I do that? At this juncture, some people will start to write a trading journal, yeah? Will enter into their reflection or whatever. I'm showing you this. This is what I did when I was in the floor. In the floor, I'm scalping. I do 100 trades a day. I cannot possibly enter a trading journal with scalping and 100 trades. So I did a very simple thing whereby I know, yeah. Did I do my PRR properly? If I did, I give myself a tick, a tick. If I did not, I give myself a cross. Okay. Now, ladies and gentlemen, let me show you. I want to be very honest with you. I am not saint. I am not perfect. I have my problems as well. Most of the time, it should be thick. It should be thick, yeah? Can you see that? I do have some occasion cross. Can you see? Can you see these are some crosses? All those crosses, by definition, once I have crosses, means I did not follow my plan, or I did not do a proper preparation, all right? On this particular day, I still remember. I want to share this with you so that you know how important this is. This is 1 month, by the way. This is 1 month. This is first week, second week, third week, fourth week, fifth week. On this month, these two crosses caused my whole month to be negative. All right. They show how important it is for you to do your proper PRR every single time you engage the financial battleground. Yeah, it's war, it's no play. Huh. All right, so with this, quite simple. What I've shared with you is this simple PRR. Okay, it's simple enough, yeah. But if you follow this consistent routine, and you will soon find yourself in the winner's circle. That is how you keep doing again and again and again, and you will be able to reach a state of mental conditioning for peak performance. So, all right. So what do I do next for the next 5 minutes? I obviously will not go through my daily, weekly review. Yeah. So maybe I would do a quick monthly PR. This is for those of you who have been joining me for the last few sessions, especially last month, right? I still remember last month we did it on the 3rd of November. It was planned long time ago, and when it was approaching, right, we realized that it's on election day. So therefore, they made me talk about election as well. Yeah. Now, as you can see, I am not exactly a fundamental guy. So this is what I shared with you. Let's recap. This is from last month's slide. I'm not a fundamentalist, right? I told you already. I only focus on some fundamental things that is long lasting. Yeah. Do you still remember these 3 points? The first point is I mentioned that Trump is about one of the best US president that is good at manipulating the market. He knows exactly how to manipulate the market for it to rise healthily for 4 years. Yeah. So that is the first point. Now, the second point, printing of money. And the third point, the tech sector performance. Yeah, evidence during the because of the COVID-19. All right. I highlighted the second point, right? The second point. This second point is very important because this second point actually changed the way the market behaves. These last 10 years, the market has been behaving how it is behaving is because of this massive printing of money. Now, in the past, there's one thing called contrarian approach. When market is at a high point, right, you want to know how the men on the street, messy people, got sucked in. Once the majority of men on the street get sucked in at the high point, market is due to crash, to kill all these people. But because of the printing money, it's no longer the situation. So don't be too eager to go and look at contrarian and see whether men on the street get in or not. Although there's still a bit of impact, but it will no longer be what it used to be like the last time, right? So I highlighted the importance of this printing of money, and everybody, most of the analysts who do fundamental, they are talking about whoever wins the president election, there will be more printing of money, right? So therefore, doesn't matter who wins, printing of money would be a certainty. This is what I shared with you last session. And that is the fundamentals, right? But we also want to look at the technicals. Now, last session, I shared this with you. I'm bringing this up again. This is one of my weapon, one of the weapon that I have total faith in, just like my rock climbing shoe. Trust your shoe, this is my weapon. I call it TY map, a pair of parameter 35-55, and last session I shared with you, apply it on STI 1 hour. Those of you who attended, do you remember? This would give you about the best trend. All right, this is what I shared with you last week. I shared with you more last round. I show you 2 of them. Can you see a more than 1 month of bull market, more than 1 month of bear market in 2018? 1 month of bull market supported, right? One up before it plunged and give you a sell in May. I just show you a couple of examples. Now, these are trending textbook example. Of course, there are other sideways examples that will not look like this, all right? However, when the market trends, my TY map would be the perfect indicator to guide you. Last week, or rather last month, I also show you the Brexit uncertainty, right? It caused the market to limit down, and then after it stabilized, it stay above. Once it stay above, you have to long. I also show you last month the election in 2016, right? When Trump shocked the world, leading to another market crash. After a bit of uncertainty that lasted 1 week, the market stayed above and started its run. All right. Now, so I was thinking, would the market show uncertainty? Because there could be Trump not admitting his defeat or whatever, right? Now, my gauge of uncertainty is correct, but the market did not react in an uncertain manner. This is what happened last month when I was doing the session. The market was actually premium. The uncertainty caused it to go discount, but just before the election night, what happened? STI climbed all the way and go a little bit to positive. I was actually expecting some fluctuation here before the market eventually stabilized, right? But what happened? Let me show you in terms of on that day. This is our community Facebook. STI SiMSCI. Before election results, STI went above the MAP and WPP. Okay, what happened the next day? STI has golden cross. It's no longer bearish, right? Definitely not bearish anymore. Another day, the market gap up with a runaway gap. One more day to get all the moving average to give a golden cross line up. Basically, there's no uncertainty and the market has been going up. And by the end of the week, there are additional things here that look a bit messy to you, but this is a daily chart. Under very bullish condition, if it breaks upside, it's going to be my opera house formation. It's a particular pattern that I teach. It's my pattern that I teach. This opera formation will give me an upside target that flips from this one up to the other side. So this is what happened on the 7th of November. All right. So this will ultimately make STI touch the 200 EMA. Okay. Okay. So I still remember last month I gave this advice, to the people who listen to my webinar on the 3rd of November. I split my group into 3 groups. Now, investors, what are you supposed to do? Remember, because of the fundamentals, I was telling investors, you actually should be long already. You should be holding long position, because whoever win the election, we are uncertain about the short-term short-term gyration, but we are certain about the printing of money, and therefore there are a lot of money coming in. Investors, please get invested. All right, existing traders, what do you do, right? You know how to handle derivative, yeah, because there is margin call, whether you long or you short, follow per SOP, all right? So eventually, once the market stabilizes, if it goes above MAC, you have to long. That is what I said the last session. Newbies, I told newbies to stay out, because if you want to long and the market go the other way, with margin call, if you don't know how to cut loss, I don't want to be responsible for whatever outcome that you might be facing, right? So I'm sharing this news, this advice with you during my last session 1 month ago. So let's take a look at what happened to this 1 whole month. Now, again, consistent to what I've shared with you over the last few sessions, this is the TY map. I combine this with WPP. Remember, if you combine map with pivot, it is a very good pair of advisor. That once market is above both, the trend is up. When the market is below both, people are selling premium. All right. So last month when I did the session, it was on a Tuesday. It was doing this. Yeah. Wednesday was doing this. Thursday it gap up. Right. So it is already doing premium. And if you remember during one session when I teach you pivot, yeah, how do you use pivot? When market trends, it will aim towards R1, R2, or even R3 on the top side. If it trends below, it will aim towards SY2, S3 on the bottom side, right? Over this 1 whole month, market reach R2, next week R2, next week R2, and after running 4 months, 4 months, first, second, third, fourth, market run all the way to reach R3 with a shooting star. Okay, now again, understanding market structure, probability of this fella continue to go up will be less, because it is very difficult for the market to run 20% in 1 month and still continue to run without a proper rest. All right, so anybody with experience can tell you that this is nothing great. So therefore, after running so much at the R3 with a shooting star, that is how the market snapped back to MAC. The only thing I did not really expect it to do is with such massive sell down with heavy volume yesterday and today. All right, so therefore, as of this week, I printed this, I updated this before, after the market closed, before tonight's session. So if you look at this, now we are doing below this and this. Okay, so which means basically what I am expecting, the STI not to be able to continue running after this heavy volume retracement. We are more likely to go into a more sideways mode in the coming week, right? Coming week, maybe into the next week. So let's take a look at the big picture. This is the big picture, that after this whole sideways, finally after drifting for so long, we have a decent monthly chart that resurfaced back above the supposed support line. So to me, 2582 should be a very, very strong support. Should be. The only question is, how far can it run? All right. Honestly, I'm not sure if STI can eventually come back to here, right? It's actually quite remarkable. Now, can it go above here? I really do not know. So with that, I have reached the end of today's session. So with these pointers, let's recap. I liken trading to warfare. Instead of talking about all the rest of the Sun Tzu Bing Fa, I just want to borrow the know thyself, know thy enemy, right? The mindset is about know thyself, that many people either do not know, or totally ignore this portion. So they simply just fight the war, and you don't know why they lose. If you only know enemy and know thyself, you cannot possibly 100 battles, 100 victory. So now you already know that SiMSCI, all right, or Singapore market is in this big sideways band. It's not a good investment composition. I can't explain the fundamentals too much, but it is nevertheless still a good trading instrument. So key pointers to know yourself. I've given you the important points to achieve top form, to achieve in the zone. So work on those 6 points, and you would be able to eventually move closer to the winner circle. All right. Now, before I wrap this up, I want to give you a couple of additional pointers. Remember these two principles. They are very important. Whether you look at technical analysis or you're looking at the whole market itself, remember it's all about greater fools theory. If you really understand this, you would look at fundamental in a slightly different way. You won't say that, hey, good news there, why market cannot go up? Bad news there, why market cannot go down, right? Whether the news are good or bad, if no more fools are willing to buy, market cannot go up anymore. No matter how bad the news are, if no more fools are willing to dump, market will not go down anymore, right? So especially this period where the money printing is so massive, yeah, do not read the economy and see so many business going past. You see that, oh, second wave, third wave, fourth wave, lockdown, people out of job, yeah. Why is the stock market going up? Because the stimulus package is providing fools in the market. When this is over, then we talk about it, right? So therefore, most of the strategies are suggesting buying on dip, yeah, which is correct for as long as you have money being printed. Now, number two, it's a zero-sum game. It's a zero-sum game. Now the printing of money are providing something, but eventually, no more printing of money. It's going to go back to this whole zero-sum game. By definition, good traders make a lot of money. Where does it come from? It has to come from losers, correct? So do you have more losers or less losers? Do you have the answer? Yeah, generally the 20-80 rule. 20% of the people will be making a lot of money. It has to come from the 80% of the losers. Right, you have gone through my 6 pointers for key mental conditioning. Do you still remember one of the point is about positive thinking? Do you know losers are very irritating? I give you an example. I come across some of the public forum or whatever. All right, they are talking about a course, they're talking about trading, and then someone key in one remark. Oh, do you know 80% of people lose money? How would you react to such a remark? Abu then, do you expect everybody to come to the financial market and everybody makes money? I'm telling you, it is impossible. Just for a couple of simple reasons. Do you think everybody is disciplined? Do you think everyone can do all those 6 points that I've given you? Do you think everyone is committed to success? Do you think everybody is willing to put in effort? If not everyone is willing to do that, in fact, 80% of people will not be doing that. These 80% will naturally go into the group called losers. They will be contributing to you. All right. So therefore, as Sikoda says this, everybody gets what they want. In fact, I want the complete quote. Yeah. As Sikoda says, win or lose, everybody gets what they want out of the market. Some people seem to like to lose, so they win by losing. Yeah. They win by arguing. Okay. Now, he is talking about subconscious. Subconscious. Most people, everybody would think that they want to come into the market to make money, but actually the subconscious is already a loser. So it's going to be very important for you to sit with winners, talk to winners. The conversation is different. They will be telling you about opportunities. They will telling you possibilities. Yeah. Whereas the keyboard warriors will drag you down. So choose your companion wisely. Right? In Chinese, I heard of this. 跟了蝴蝶寻花朵，跟着苍蝇去厕所。Yeah. So talk to winners and you will be a winner. Talk to losers, well, you will be, okay, fill in the blank. All right. So the purpose of this monthly webinar is for you to trade SiMSCI as soon as possible. I really hope that I've given you enough pointers and motivation for you to at least attempt SiMSCI. If not, open an account with Philip and try, get their service. Yeah, SiMSCI, decent size, fundamentals close to heart. It's a contract for the best. Learning to specialize, to hedge your SG shares. Yeah, current promotion. Check with Philip if there's any more promotion. So how to start and find this journey. All right, my program. Now, those of you who know that I have a funded program, which I announced last month, I am so sorry, because of some delay. It will not happen until next year. Okay. But rest assured that if you have sent to me your email, I have your contact. Once it is ready, the first thing I'll do is to inform you. Yeah, 95% funding. Next year, I think it will still be 95% funding. just because of some technical things that they need to work out before it can be launched. Okay, so if you wish to attend my course, you just have to wait a little bit more. Those of you who do not know, okay, I have a program that is funded, a SGX program that is funded by IBF. If you want to know more about that, so do drop me an email. Yeah, so when it is ready, I would keep you informed. Okay, meanwhile, you can approach Philip to open an account and get your broker's help to explain all the fundamentals to you, and you can, if you dare to, you can start to trade a little bit carefully and explore those technical things that I've taught you over the last few sessions. Yeah, so as long as you maintain your losses very small, get started. Your learning would take time and place. Okay, so well, with that, I've come to the end. Again, I have to apologize to the organizer. I ended on the dot 8:30. I'll leave it to organizer to decide whether we should take any Q&A or let it be. Philip, thank you.
Hi. Okay. I think we can take one question for the Q&A session.
Okay.
Yeah. Okay. We have someone who wants to know where you think is a good target of STI's sideways correction in December 2020.
Where do you think I target? I actually don't have target. I don't have. In fact, for my you remember just now I mentioned about Opera House target, right? Actually, it has reached that movement's target already. Well, let me see. First of all, if you talk about technical chart, you go all the way back to June. We move to a June highest closing point. All right, and the market pierced through and it pulls back now to test that level. Yeah, it's still holding. It's still holding. So if this level can hold upside target, let me see. That I have another SOP Actually, I told my student we actually last time in terms of rotation, right? We would want to go for year-end close. If it can reach, I think many people would be very, very happy. Yeah. So I'm not sure it will come, but otherwise, if market can take on the current high, the most logical psychological level would be 3,000. So let's look at the 3,000 level first before we talk about the rest. Now, again, why I prefer not to answer this type of question, because I would let the market tell me what happened and I can change my mind any point in time. So again, those of you who are already trading short term, take note. When I start to feel that the market is likely to go into a more sideways mode over here, that is when you want to take note of where your TY level is, where the WPP level is. All right. So if the market can go below that, since it's not trending down, you want to buy it back towards the fair value. And if it's too much above already, don't buy anymore, because once it cannot hold up there, it is very easy for SiMSCI to snap back to the fair value, and that is when you buy above, you will have to suffer losses. Okay, I think I would prefer to answer it this way, more pertaining to trading. Okay.
Okay, thank you very much for speaking to us tonight, Tom, and thank you everybody for your time tuning into this webinar tonight. For the questions we didn't get to answer, we will do so via email, and we will be sending everyone a link to today's webinar so you can watch it again if you would like to. Do visit our website, philipfutures.com.sg, if you would like to reach out to us, or indicate in the post-webinar survey if you want us to reach out to you instead. Thank you for today, and that's all. Thank you. Goodbye.
All right. Thank you. Goodbye, everybody.